The Commodity Channel Index is sometimes shortened to the CCI. It is an indicator that can be applied to other charts besides commodities, such as charts of stocks and currencies. The CCI is based on the difference between price and a moving average that is usually set to a length of 20 by default. As a result, when price is over the moving average, CCI will be above 0. Price closing under the moving average is displayed with the CCI below 0. The channel is defined by a range from -100 to +100, where the majority of market movement should theoretically take place. Going higher than this range can indicate overbought conditions. Going lower than this range can indicate oversold conditions. In the following series, we will look at various uses of the CCI, along with preferred conditions for its application, and cases where it fails and/or has limitations. A wide range of real chart examples will be covered from various time ranges, so no matter when you watch this or which particular charts you choose to apply the CCI on, information presented in this series can be of use to you.